Hi, this is Brad with Copper Creek Cuts, a lawn care company in Northeast Florida, here to talk about one of the more common mistakes that folks who run their own business might make, and that is buying equipment at the end of the year to lower their tax liability for the following year when they file taxes. How does this even work? What is the principle behind it? Well, we're going to use some very simple numbers, an oversimplification, just so you can understand the principles. The numbers in your situation will absolutely vary. So again, don't get hung up on the numbers. We're just trying to understand the principle. The idea is if you earn $1,000 in a year, you are going to pay taxes on that $1,000. If you are at a 20% income tax bracket, which again, we're oversimplifying, but that means you pay about $200 in taxes on the $1,000 that you earned, leaving you with $800. If you go out and buy $500 worth of equipment before the end of that calendar year, then when you file your taxes, you're only going to be paying taxes on $500, because even though you earned $1,000, you spent $500 on qualified business expenses, and that lowers your taxable income down to $500. Now you're paying 20% of $500 in taxes, which is only $100. So you've saved $100 in taxes. The other thing that is going to be less common, but may happen, is that by reducing your income, you may fall into a lower tax bracket. So let's say, for instance, going down to $500 in taxable income lowers your tax bracket from 20% to 10%. Well, now you're only paying $50 in taxes as opposed to $200 when you earned $1,000. Again, simplifications, generalizations, but the idea is that by lowering your qualified income or your taxable income, you can save on the amount you have to pay the government in taxes. That's the idea. When is it a good idea to do? It's a good idea if the equipment you're buying, you know for a fact you're going to have to buy next year, and this year it can save you a little money on your taxes and you've got the extra cash, so why not buy it now? If that equipment is going to make you money the following year, that's a pretty good idea. When is it a bad idea? Well, if you have to borrow in order to come up with the $500 to then go out and spend on equipment so that you can lower your tax liability, that's a bad idea. You should never try and borrow money to take advantage of tax savings, because you're going to have to factor in the fees of acquiring that money, and it's generally just not worth it. The other thing is if that equipment is equipment that you do not need. So if you're going out and you're buying $500 worth of hand shovels, when those shovels are just going to sit in storage the whole next year and never be used, well, yeah, you saved $100 on your taxes, but you spent $500 on tools you're not using. You really wasted that money, didn't you? So it can be a good idea if you need those tools or equipment in the following year, if you know those tools or equipment will make you more money the following year. But if you're just buying equipment just for the sake of saving some money on your taxes, that's a bad idea. It's not something you should do or imitate. Then the follow-up question is, okay, well, what if I still want to save some money on my taxes? Which is the whole point of this series, self-employed retirement plans. They take a number of different names, and some of them have multiple names for the same things. We'll get into all those in later videos. But the idea is that instead of dumping money in equipment you may not need, why don't you set up a self-employed retirement plan? You can take that same $500 that you would have wasted on equipment you didn't need, put it in a self-employed retirement plan, lower your taxable income by that same amount, because some of that money that you put in is tax deductible. And as the years go by, that $500 will actually work to make its own money. That is what this video series is about. If you're interested in learning more about self-employed retirement plans, there's no sponsored links or anything, but there is going to be some information down in the description below for reading material. Or if you don't want to read up, you can just watch the second video in this series here on Echo Means Business.